How Biden's green agenda will impact stocks? Elected President Joe Biden has issued nationwide the financial exchange as he orders his plan over the span of the next 4 years. It will have a deep effect as Democrats finally got control of Senate after Georgia Senate cleared off decisions. Biden's updated plan has helped the stock exchange as of now and is required to benefit more economic development, higher loan costs and more stock exchange gains. Biden's plan could speed up the process to repeat its stocks that has effectively been in progress. His plans are not without risk, including rise in interest rates that will slowly destroy stock market gains. The Biden's plan is focused to bring about more quickly developing economy, a stable financial exchange and a higher loan cost in its first year. Yet, those results will be equally formed by the amount of the new president's plan is supported and how fast his arrangement to speed up vaccination can keep down the spread of the COVID. Biden's strategy got a major boost from the result of the January 5 Senate overflow decisions in Georgia, where two popularity-based successes gave him a sudden most trusted highest part in the Senate. Each gathering has now 50 seats, and VP Kamala Harris will make any final choice. A day before to launch, Wells Fargo Venture Foundation raised its value for development, financing costs and stocks somewhat on assumptions that money spending will be a lot bigger than it would have been if kept up with Senate control. News is circulating that S&P 500 is now 4,100 from a previous 3,900. The firm also expects the 10-year Treasury yield to rise to a range of 1.25% to 1.75% by year-end, from a previous prediction of 1% to 1.5%. However, GDP has increased to 4.7% from 3.8% previously and economic numbers have been coming in better than expected. According to some stocks experts, Biden's improvement proposal has sped up the capital market which was at that point starting, as financial investors shift into regular from development names. There are plenty of stocks in the last 10 years that have profited with falling a ton in genuine rates. On the probability that that goes backward, it doesn't mean they will shrink, or go down at 40%. It simply implies they will lose more in this repetitive healing that has been actually valued. Effects of Biden's agenda. The firmly watched 10-year depository yield began the year at 0.91%, and was at 1.09% later. Officials don't consider it's anything but an issue for the stock exchange overall except if it begins to move quickly higher. GOP will probably keep the Senate and frustration huge, economy-killing assessment builds while Biden's organization will pass out genuine harm with arrival of new guidelines that don't need legislative support. This load of activities will result into the gathering of an economy that is yet battling with the pandemic. The financial exchange failed after following a report about how President Joe Biden designed to pay for his reformist plan, as specialists were warning that his proposed agenda increased charge climb that could have truly generate shameful results for the country. Biden will propose nearly multiplying the capital additions interest rate for rich people to 39.6%, which will help to pay a great social spending amount needed for a constant variety. For those getting of $1 at least million, the new top rate, combined with a current overtaxed on consideration pay, hints that government charge rates for well-off financial investors could be just about as high as 43.4%. The new far-off 39.6% rate would be an expansion from the current base pace of 20%, individuals said on the state of silence in light of the fact that the arrangement isn't yet open. The stock market immediately pitched after the report was distributed, with the Dow losing 1% of its general worth. Will United States stock market crash in 2021? Dow Jones, S&P 500 and the Nasdaq have been very inconsistent over the recent weeks, responding to news about President Biden's proposed capital service charges. Financial investors have been on a roller coaster ride. Observe whether the feared stock exchange drop is not too extreme. The Nasdaq compound record falling below the 50-day financial exchange normal is the most powerful indication of possible danger. This proposes that financial investors have lost confidence in enormous tech and that stocks exchange emergency is approaching. Due to recent stock market situation, financial analyst predicts GDP will develop by 7% in 2022. Despite the fact that it is accepted that the force of development, seen during late 2021, will disappear, stock markets are as yet expected to develop, giving freedoms to financial investors to secure the benefits they want. If you like the video, please subscribe our channel and like this video, and thanks from our team.